From DBS Group Research. Taimur, rising India. You got the budget, though, and then the election. What are the implications then for inflows and headline growth?
So clearly, India is going through its moment in the sun, if you will. When we look at deal making, the promised FDI in the pipeline, it does look like the country's on the precipice of a big investment-led, manufacturing-led growth spurt, maybe for the rest of the decade. It is important to have macroeconomic stability to guide that growth. We are seeing, some degree of attempt at fiscal consolidation. We'd like to see more, but again, the supply-demand dynamic with respect to Indian bonds is pretty favorable, despite the fact that the deficits have ballooned in recent years. Various index inclusions that are happening for Indian bonds certainly create some degree of stickiness to foreign inflow support. And domestically, whether it is Indian bonds or Indian equities, Indian consumers are so confident these days. You could argue to some extent the marginal foreign flow is of secondary importance. The systemic investment plans that Indians have, you see literally hundreds of millions of dollars being deployed in the market every week. And that has become a very critical support, something that you don't see in China. That domestic support for the domestic market has waned. In the contrast, in India, that optimism wave is supporting financial markets substantially.
It is local money. Interesting. We were talking about the appeal. One guest earlier this morning was talking about the appeal of high-yield Indian bonds linked to infrastructure. And I pushed back and I said, well, look, the numbers may be impressive or attractive, but if you take a look back at the last time they had problems with infrastructure, it killed the credit cycle for many, many years. Obviously, things have changed, right? But this is, Indian bonds, this is debt, this is borrowing in just another name. And whether or not we should be careful this time around. What do you think?
I think that there's certainly room for watching for that. Think about the optimism, high confidence cycle we have seen elsewhere in Asia over the past 2-3 decades. If you don't manage the credit dynamics, sooner or later there will be an overheating, over borrowing cycle, which could then end in tears. How many times we've seen this in Southeast Asia over the last 3 decades. So when we look at, on the margin again, the flow number with respect to both consumer credit and corporate credit, big upswing is affordability, balance sheet, keeping pace with that big upswing in borrowing. I think it's a confidence play. If somehow the confidence is punctured because of external or domestic reasons, this would come back to roost.
So